With over $250 million raised in private debt and equity for inclusive financial institutions, Verdant Capital Managing Director Edmund Higenbottam joins me to discuss how Africa's investment landscape is changing and what can drive consolidation for fintech. Edmund, thank you for taking the time out to join us today. It's a pleasure to have you on the show. I was just this morning reading a report from KPMG, just looking at the performance of the fintech ecosystem in the first half of this year, and the numbers were quite impressive. We saw a recovery from the second half of 2020 up until now. Numbers are quite impressive, but just to help us understand what you've seen since this recovery started in terms of the deals, the size of the deals, the valuations, and the successful exits in that space.
Thank you very much indeed, Esther. So we see volumes probably going to end 2021 around the $3 to $4 billion mark, and that's around about 2 to 3 times the volumes in 2020, and that's across M&A, equity raising, and debt raising for fintech specifically, for sub-Saharan Africa specifically. Bigger deals such as OPE's capital raise from SoftBank clearly capture the headlines. But actually, if you look at those numbers in the global context, they're not particularly big. In fact, one large deal in the US could be as much as the entire volumes for the whole continent for 1 year.
But are you surprised at the sheer size of the deals in question? I know that the US, like you said, got the lion's share, as it were, but looking at the African region also, the amount of monies or the sheer size that Africa was able to get, were you surprised at the numbers?
No, not really. If you look at financial services, it's the biggest proportion of GDP for the continent as a whole, and for many of the markets across the continent. And the financial services sector is, on one hand, ripe for disruption from a fundamental perspective, and on the other hand, there's very significant barriers to entry. So these very interesting, very exciting businesses which have a product, which have a very strong use case, which have that use case and that product tested and proven in the market by businesses and customers across the board, there's a very significant opportunity for them, but it takes a lot of capital.
Now, for Verdant Capital, you've been able to carve out a big chunk of Africa's fintech transactions. How have you leveraged the themes in the market, and what would you say are also the dominant themes?
So we've always run a global business. So all of our clients are in Africa. All of the fintechs, all of the private credit businesses, companies we advise, we represent, we invest in, are all within the African context, but we're a global business. So the vast majority of the buyers and the investors that we bring to our clients, bring to our fintechs, are global. So in the last 12 months, we've closed deals with buyers, investors in fintech from the US, from Japan, from China, from all across Europe. I think that's very important in this sector especially, but also, also more broadly in the African market.
Now, it's quite interesting that we're seeing this big numbers in the pandemic year, talking about half year 2020, we're still right, in the eye of the storm, as it were, even up to, now as I speak, the pandemic is still not over, and we know that asset managers, investors were rethinking, looking at markets and just rethinking overall strategies, whether it's fintech, M&A, etc. How would you say that has impacted decision making? Obviously, the numbers are good, a testament to the fact that it's positive, but just how investors are rethinking these asset allocation and classes.
So in March last year, when the price of oil went negative briefly, I think a lot of investors were in shell shock. A lot of market participants were in shell shock, but that went away very, very quickly. We see more volumes in 2021 than in 2020. We saw the second half of last year being very strong. I think that's true in the continent. I think that's true globally. And actually, the pandemic in many ways is driving deal flow. It is driving specific business models fundamentally. It's causing people to change their behavior. I don't want to go out, walk to my branch because I'm scared of getting COVID. I'm gonna download the app that I always thought about doing, but I never did. And that's a real factor, and it's something that we expect to accumulate in terms of impact over time.
Now, Verdant Capital is currently executing transactions in 20 African countries. Could you share more insight on that? What you're involved in, and how, I mean, the needs of the clients, and just, is it M&A? What are you doing at the moment?
Oh, it's broad, Esther. So the biggest single part of our business at the moment is fintech. It's tech-enabled businesses providing differentiated credit products, differentiated route to market for credit, different types of payments, both cross-border and domestic. It's insurtech, different categories of insurtech. And we always break down our business between and look at it by looking at these different segments. But actually, these segments change every 18 months because they converge. And what we saw is two separate segments are actually no longer separate because, we've been part of consolidation between players in one segment and the next.
Now, within the scope of the growth of fintech and just some other sectors, there are also conversations around cryptocurrency and blockchain. That's also a conversation that everyone's been having, even within the growth that we're seeing in fintech on the continent. What are your thoughts on that? Is this, I know that central banks across the world are still a bit nervous, but I guess it's different depending on who you ask. But what are your thoughts?
So I think there's right to have a degree of skepticism and a degree of caution about cryptocurrency. I think there is potential for some cryptocurrencies to be used, used for harm. One looks at the overall financial system, one looks at society as a whole. But equally, one shouldn't throw the baby out with the bathwater. I think there's a lot of very interesting businesses which do use cryptocurrencies in a very legitimate way, absolutely legitimate way, and do so to promote.
Let's talk about your forecast for. Okay, let's talk about your forecast for the fintech space, particularly in Africa, going forward. Based on the momentum that we're seeing right now in Africa, perhaps also particularly in the specific hubs like Kenya, Nigeria, South Africa, what are your growth projections going forward for the continent?
So we don't see the large cap or the growth phase fintechs. We don't see that as about hubs. We see that predominantly being about businesses which are cross-border, which are increasingly Pan-African. We do see hubs, but we see hubs at as being relevant to a slightly smaller end of the value chain, or slightly earlier stage of the life cycle. What we see on a Pan-African basis, we see more consolidation. We see more consolidation across border for reasons I mentioned, and we see more consolidation between different segments. So payments, on one hand, particularly middle income and bottom of the pyramid payments, last mile payments, cross-border payments, we see that as being very synergistic with credit tech, and the best credit tech business is looking to promote their route to market, and we see consolidation. Somebody like a emerging payments leader such as ZPay, we see getting involved in credit tech market. We see many others getting involved across those two verticals.